You can think of miners as this balance of a payment processor where our job is to actually move value across the network. So if you're sending me Bitcoin or I'm sending you Bitcoin, there's a miner involved in that transaction that's validating it and making sure that it processes. The other thing that miners do is they actually secure the network. So like any financial network, you have to secure it with some sort of encryption. Most people are familiar with having a password protecting their bank account. Uh, the Bitcoin network is secured by essentially a giant wall of encrypted energy. So you can think of us as Bitcoin miners as sort of like having these distributed data centers that are all protecting the network at the same time.
Welcome to CREPN Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network CREPN Radio. Thanks for joining us. My name is Jay Darren Gross. This is a podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Beau Turner. Beau Turner is the founder of Abundant Mines, a Bitcoin mining company built with one purpose: to make passive crypto and infrastructure investing simple, secure, and sustainable. And in just a minute, we're going to speak with Beau Turner about demystifying Bitcoin. But first, a quick reminder, if you like our show, CREPN Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Beau Turner. Welcome to CREPN Radio.
Thanks so much for having me, Darren. It's going to be fun.
Yeah, I'm looking forward to our conversation. Before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Absolutely. Well, most people at this point probably know me as the Bitcoin miner who used to be a real estate investor and then sold it all to get into mining. And over the last few years, my wife and I built Abundant Mines into an 8-figure company. I would say we're one of the leading Bitcoin mining operations in the world. We serve hundreds of clients all over the globe and basically just help them acquire Bitcoin in the most efficient, tax efficient, hands-off way that they possibly can. And the way that we got here is a little bit unconventional. And it was that my wife and I saw Bitcoin mining as this really underappreciated and even maybe vilified opportunity by people who didn't understand it. And so we were attracted to get in as a financial opportunity. And our very first venture into the space cost us $500,000 just because we got burned by a really bad partnership. And instead of just walking away, we looked around and realized there were thousands of other people who thought this was an interesting industry, but were sitting on the sidelines for the exact same reasons that we encountered, which was they'd either been scammed, were afraid of being scammed, knew someone who had been scammed. And so we essentially built our company to fix that. And what I'm really passionate about that we do on a deeper level is that we help people build abundance in their life. And I think that the people who win in this next decade will be the ones who genuinely understand a couple of things that we all depend on every day. But unless you're a Bitcoin miner, probably have no reason to really examine very deeply. And those two things are energy and money, how they interact, how they're both evolving, and how the shifts in both of those things right now are connected to everything that we see in the macro environment, computing, finance, AI, it's all connected. Beyond the business, I spend a lot of time educating investors on how they can think about the world that we live in, because personally, I felt lost after 2020. It was a very confusing environment to me. I felt like the world was changing faster than any of my mental models could handle, and I absolutely hated that feeling. And so I don't want anybody to be stuck there when the map is readily available to them. And I think that if you just understand a few fundamental things, you can be here to ride the wave rather than get sucked under by it.
No, that's encouraging and insightful there. I'm curious if we could take just a step back on your real estate investing. Can you give us a little overview of what your portfolio looked like?
Sure. So I grew up in Alabama originally and then lived in Texas for about a decade. And so I had a portfolio kind of spread across the Southeast that started with just B and C neighborhood single family homes and then grew to, small commercial buildings, light industrial, and then any manner of creative financing you could possibly think of, I really enjoyed being involved in. So, seller finance deals, subject tos, owner carries, wraparounds, and that actually informed a lot of what I took into the Bitcoin mining space because there were so many deals that on the surface looked like they couldn't be done that were just asking for a creative financing approach. So I credit my real estate background with actually giving me a pretty nice edge in this new space.
Got it. And just for context, what was the time frame you were in real estate as an active investor?
The first property that I acquired was in 2014, and then the last one that I disposed of was in 2024. So from the
Okay,
time that I decided to make the shift, it was about a 3-year liquidation period.
got it, got it. All right, so you described kind of the curiosity and interest in Bitcoin. You got burned. Tell us a little bit about the I guess your entry point because I mean $500,000 sounds like a hefty sum to get into something that you may not fully understand.
Well, what I think is helpful for people to know is I thought that I did understand. And that's the place that a lot of people can get into. There's this I'm going to forget what it's called, but it's like the competence trap where you think that you're more competent in something than you are when you start to get into it. So I had actually been in the Bitcoin space for about half a decade at that point, but just as an owner of the asset passively. So I hadn't built anything in mining, but I had the confidence of someone that had an engineering degree and, data center coursework, thinking, well, this is just running computers in a server room. How hard could it be? And the truth is, it matters a lot who you get to work with, what the environment that you're working in is. Since this is a sort of risk focused environment, we could go deep into all of the red flags and risks that I didn't notice at the time. But the short story is that my wife and I saw this as an opportunity. We wanted it to be the same as what our current customers are looking for, which is passive, hands off, letting computers do the work for you 24/7. And if we had picked the right person to work with and the right environment, that probably would have gone fine. But we got uh, let's call them a discount partner in an area where you can't afford to make mistakes with how you manage your heat. And so this was also right as we had gotten engaged. So my wife and I had gotten engaged, and over the course of the next couple of weeks, the first signs of this deal going badly started to crop up. And unfortunately, it was about an 8-month period where we were just waiting for information, reaching out, getting bits and pieces, but ultimately just watching the opportunity cost of what we could have been earning, which, at this point, I mean, we talk about the $500,000 loss, but it's even more painful maybe to think about the opportunity cost of the Bitcoin that we weren't mining at that point, because that would easily be into the seven figures at this point. But
Got it.
suffice it to say, we took that experience and decided the best way to mitigate our risk is just to do it ourselves. And I think that many people underestimate how much goes into these facilities, these operations, and I did as well. But the truth is, it's a really intricate machine that we're setting up, and it looks like on the surface you're just plugging in computers and letting them run, but the operational reality is a lot deeper than that.
Got it. So just as a starting point then with respects to a Bitcoin, cryptocurrency, I mean, Bitcoin is one of many cryptocurrencies. It's kind of the OG, I guess, the one that I think is most recognized. My understanding of Bitcoin is limited in that you basically have a currency, a digital currency that's created by, I guess, whoever does so, and then they sell shares in that, and there is some sort of a and I don't remember the exact word. I don't know if it's a closed ledger, but it's an open ledger, but it's a ledger to where people can buy shares, coins, whatever the currency is, and then trade coins, and that there's unlike the U.S. Treasury where you can continue to add a supply. It's got a cap on supply, which essentially then holds its value more. But I mean, that's about the extent of what I understand. I don't fully understand where you can use cryptocurrency with respects to the purchasing power, and I certainly don't understand mining. But with that base of just a limited understanding, I'm wondering if you could kind of confirm or correct what I laid out there, and then tell me how the mining interacts and what that's about.
I think the way that you described it is probably how most people understand it. And you hit a couple of points that I think are accurate and what people should focus on, which is like, why is this unique? Why do we care about this at all? And one that you mentioned is the fixed supply cap. So Bitcoin uniquely uh, un unique in the space of all assets has a truly fixed supply. So if you think of the US dollar or even gold, I mean, there's even if the inflation rate is fairly slow, it's something like gold. There is effectively an unlimited supply if you had the resources to find it. We've never had an asset that's truly bounded and is perfectly scarce until Bitcoin. And the reason that that matters is you can actually have a measuring stick for how you measure every other asset if you have an asset with a fixed denominator. So when you think about inflation, the problem with inflation is that you never have a clear way to measure your economic reality because the measuring stick is always changing. What you're denominating all the goods and services in the economy by is constantly fluctuating in its ratio to all of the money supply. And that creates inefficiency, it creates kind of perverted incentives. And Bitcoin is the answer to that. It's a free and open software protocol that anybody can run, anybody can participate in, nobody controls at any central point, and is truly like a grassroots monetary system, the likes of which we've never seen before. And it's unique in the cryptocurrency space, mostly because of its design, but also just because of the critical mass of people that have hitched their wagon to it as an asset and as a protocol to build on top of. And so I think it's worth noting that if you're looking at the crypto space, I would spend, and I personally spend 100% of my time just looking at Bitcoin, and everything else is kind of a distraction. I think that there's a lot of grift, frankly, snake oil in the crypto space, whereas Bitcoin is this truly unique invention or discovery, depending on how you want to frame it, of a new way of thinking about money that is bounded by energy. And since you asked about mining, the way that that new Bitcoin is created is through the mining process. You can think of miners as this balance of a payment processor where our job is to actually move value across the network. So if you're sending me Bitcoin or I'm sending you Bitcoin, there's a miner involved in that transaction that's validating it and making sure that it processes. The other thing that miners do is they actually secure the network. So like any financial network, you have to secure it with some sort of encryption. Most people are familiar with having a password protecting their bank account. Uh, the Bitcoin network is secured by essentially a giant wall of encrypted energy. So you can think of us as Bitcoin miners as sort of like having these distributed data centers that are all protecting the network at the same time. And if any one facility goes down, doesn't mean that the network goes down. You've got this redundancy that's spread essentially in like a mesh network across the world. But miners are doing essentially those two jobs, and we get paid natively in Bitcoin to do them. So every time a new batch of transactions settles to this network, we get paid some of the new Bitcoin that gets mined, and then we also get paid transaction fees. And that amount of new Bitcoin getting mined is constantly decreasing. So there will only ever be 21 million coins. Right now, actually, as of just a couple weeks ago, we mined the 20 millionth coin. It'll take another 115 years for us to get to the 21 millionth coin, that last coin. And then after that point, miners survive solely on those transaction fees that people pay when they're using the network. So I'll stop there. That's a lot to digest.
Yeah, no, I appreciate that because it did introduce some thoughts or some info I hadn't ever thought about. So mining, if I understand what you just said, is basically, or it's not basically, but one of the aspects of mining is that you are the conduit for transactions between people that are accepting or paying via Bitcoin. Did I understand
Exactly.
that right?
Yes.
So you're kind of like a Visa or MasterCard network for the users of Bitcoin. I
You're
mean,
exactly right. When I like to use analogies, and I think the best analogy I've come up with so far is that miners are some hybrid between Visa and the military as it applies to the Bitcoin network.
so Visa, meaning you are the conduit and you get a fee for your service. Uh, the military in that it's secure. Is that or what?
Right. We're the actual, if you think of us as like the cybersecurity defense system for the network. So we're protecting the trade routes, if you will, on the Bitcoin network through encryption. So that's why I use the military analogy, because you're actually in the same way that a military projects power in different areas to protect resources or to gain resources. We are projecting power into cyberspace to protect a digital asset. So it kind of melts your brain a little bit when you think about what is actually happening, but it's very similar to what we do in the physical world, just with a different wrapper.
Got it. Well, it's interesting because the word miner, I always thought implied that you were looking for finding more, Bitcoin, or I didn't understand, and I thought, well, maybe the idea is that you are a buyer for people that are looking to sell, or that are looking to they've got X Bitcoin and they want to go make a purchase, but they need cash. They need, US dollars to make the transaction. And as such, a miner would be the party that would be a buyer of that Bitcoin at whatever the market rate or whatever discount you might include. And then you have the I mean, obviously you'd have to have the capital to buy the Bitcoin, but then once you have it, then you can either write it up or resell it or something like that. I'm curious, is that an aspect of, or is that a potential for a miner as far as an
N-
operation goes?
Not exactly, but
Okay.
I'll share with you what is true about that. And it's that miners are in a sense the buyer of last resort of Bitcoin. Um, and the way that I would describe that is we are 24/7 buying Bitcoin, if you will, with energy. So a miner is going out, for people that don't know, I mean, mining is essentially just taking a bunch of energy, running it through a computing process, and then that computing process is minting new Bitcoin on the network or getting those transaction fees. And what we're actually doing is taking the cost of energy and using that cost of our energy inputs to buy the Bitcoin rather than buying Bitcoin in the market. So if you do that well, if you do it efficiently, your input costs are far lower than the market price. So let's say that we're sitting at $100,000 a Bitcoin. If you are getting your energy procured appropriately and you're running efficient equipment, you might have an all-in production cost of $40,000 or $50,000 a Bitcoin. So that arbitrage or that margin is why you choose to mine, because instead of going on the open market and paying what everybody else pays, you've essentially set up a business or a manufacturing process, if you will, to make the same thing for cheaper. And in the process of doing that, we're also providing those essential services, the moving of transactions, the security for the network. But you can think of us as a buyer of last resort because we're always on and we're always, putting out resources to get new Bitcoin. And we can go into this if you want. It might be a little bit too technical, but the process of finding that Bitcoin, the process of actually mining, is essentially like a worldwide guessing game that's happening all the time. You could think of it like finding a needle in a haystack or completing a million piece puzzle with a single puzzle piece that you're trying to pull out of cyberspace. It's a really interesting process, but ultimately it is for the purpose of securing the network with real world energy.
So, a couple things. So, if I have and I guess is it a cyber wallet or where is it that I keep my Bitcoin?
You can keep it on a phone wallet. People have pieces of hardware. Sometimes people just memorize strings of letters that's commonly stored as 12 words. It's an information product. You can think of it as if you know the password, on quote unquote, which is really your private key, then you have access to your funds.
Okay, so I've purchased some Bitcoin long time ago for a value that seems fathomable. I mean, $1,000 a coin. You said it's 100,000 now. Is that
I think
or
we're knocking around somewhere in the 70,000 range.
70,000? Okay,
Yeah.
so my stored value. So let's just say when I bought 10 coins at 1,000. So I'm in at 10,000, but now that's essentially 700,000 if I understand the math. Or
Hmm.
no? Okay, is that right? Yeah. But yeah. You said how much was
Okay.
it? 70?
Yep.
Okay.
70,000 a coin.
77. Yep. And if I bought 10, that's 700. Okay. So, all right. So my username, password, wallet, I can see that I have these. Is it identified as the coins, or do I have is there a value? Um, when I open my wallet, am I seeing a value or just the number of coins I have?
If you're opening up a wallet, you're seeing your actual Bitcoin. So if you're thinking of this in a Bitcoin native way, there's not going to be a value associated with it in
Okay.
dollars unless you're, looking at it on exchange or your wallet happens to do the currency conversion. But
Okay.
when you actually are accessing your Bitcoin in your wallet, what you're doing is you're looking at a shared ledger. So to use another analogy, you can think of the Bitcoin network like a giant wall of PO boxes that have transparent glass on the front. So you can see what everybody has. Everybody can see what everybody else has on the Bitcoin network. It's why it's a public ledger, but you can't access everybody's stuff unless you've got the key to that PO box. So you can see what everybody else has, but you can only take an action on your actual wallet that you have a private key for. So think of it like a shared database everybody has access to and everybody can see, but only people with the right permissions can move certain funds.
Got it. So my PO box, my wallet, everybody knows that I've got 10 coins, right?
Yep.
And so if I'm wanting to sell or I guess the way it was originally presented to me is if I'm dealing with somebody else who has Bitcoin, that we can, you can agree to sell me something and I ask, how about can I pay in Bitcoin? You go, you bet. And let's say it's the equivalent of a one coin. So it's 70. I'm going to buy something from you at $70,000. And so my understanding originally would be that you and I would give you the coin. You would have. I mean, there's some. I guess is it through the mining that I would transfer that coin to you?
You don't actually experience like this when it comes to actually transacting. That's all kind of abstracted away from you. So on the back end, the guts of it or the engine, the mining process is what's helping you to transact, to actually send that money somewhere. But you don't have any awareness necessarily of the individual miner or how it's getting processed. It's kind of abstracted away from you so that you're just sending funds from one place to another on, a similar UI as what you would use for a banking app.
Okay. All right. So then I buy something from you. It's one Bitcoin. We agree on the value of that, and you agree to accept that. So when I send the money to you, or the coin, the Bitcoin to you, is that am I seeking out a miner to handle that transaction, or is it the miners that are competing to handle the transaction? I don't. I mean, I understand. Like in Visa, just or whatever, there's the payment option. You put in the card and the number, and I have no idea. It's the whoever the vendor is that I'm buying from is contracted with their service provider who's using the Visa network to take the funds and take the 3% from the or whatever. I think 3% from the retailer, whoever I'm buying from. When using the Bitcoin, so are the miners looking for this transaction and realizing there's a transaction's about to happen, and that's when they jump into action, or are there a bunch of miners competing for that transaction?
There are a bunch of miners competing for the transaction. And just like you mentioned, there's a whole back end to
Yeah.
how Visa processes transactions that we're totally, it's obscured from the view of the consumer. And it's similar if you're trying to send Bitcoin to somebody. So when I describe the mechanics of it, it's going to sound complicated, but you don't actually interact with any of this if you're just a user paying for something or sending funds to somebody. But in practice, what's happening is if you want to send me money, that transaction, you're creating that transaction and it's going into essentially a pool of transactions that are all waiting to be confirmed or validated. And miners are competing all the time, trying to be the one to validate that block of transactions. So think, thousands of people all trying to move a transaction through. They're all aggregating together. Miners are looking to aggregate to be the winner of the aggregation of those transactions to put them in the next block and add that block to the ledger. So you can think of it as rather than, your transaction and then someone else's transaction and someone else's transaction in sequence, one by one, the way that the network actually works on the back end is it's batching everything. So batching thousands of transactions together, putting into the one block, which you can think of as like one page in the notebook of the public ledger. And then once that page is written, once that block is confirmed, then you move on to the next one. And that confirmed block can never be changed. That's a part of immutable history forever now. But when it comes to actually processing the transactions, you're essentially just like waiting in a queue for the next batch to get processed. And it is essentially a bid. So it's an open market, it's a free market. If you pay $5 to confirm your transaction and everybody else is paying 50 cents, you're going to be first in line. You're going to be in that next block because the miners are seeing that you are sending an economic signal that says, I want this done quickly. I would like to get confirmed in the next block. Whereas some people, they might just be, moving from the equivalent of their checking to their savings. And whether it confirms in 10 minutes or 10 hours or 10 days, they don't really care because they know eventually it'll show up. They'll pay, 50 cents for that transaction instead of trying to rush it with a higher fee.
So in that example you just cited there, I mean, I think that's the same for like Venmo and I say Venmo just as a a network outside of the um, traditional Visa network or whatever. Um, but so are you if you and you said pay $5, am I the one that's willing to pay that? Is there an opportunity for me to say I want this done right now and I'll pay a fee, and that's or is that something that the miners are offering?
You would be the one to determine that. So the users, most people just accept the default. Again, like if you're using just a consumer app and you're sending Bitcoin to someone, this may not even come up on your screen. It'll just say, likely to process in ten minutes to an hour. and there may not be any opportunity for you to increase your fee. But if you're looking at, like, let's say you've got a slightly more, just like trade, if you're using an app like Robinhood or kind of a consumer trading app, you probably don't see all the option spreads, the bid ask, like all of this additional detail that a more sophisticated trader would want to see. But the functionality is the same. You're still just interacting with the market. So your app may give you the option to increase your fee to process the transaction sooner, or it may not. But that is the way that the network works. Is if I need to rush a transaction, the way that I do that is I just pay more.
So when you are transacting a fee, I mean, my assumption with the banks on their holding the fees or the funds for X number of days before they transfer to the other account is they're basically getting the interest off that float is kind of what I've come to I guess I don't know if I understand, but that's kind of my assumption in the model. Is there a similar opportunity for a miner if you're clearing a transaction and that for a number of however the hold time is that you are in possession of those Bitcoin and have the opportunity to, I don't know if there'd be an interest play or what, you know, what there would be like for that.
So part of the beauty of Bitcoin and the way it's designed is it removes that sort of middleman incentive that a traditional financial institution has, which you were just describing. It's like the more cumbersome and longer you can make it take, the more opportunity you have to kind of take something off the top, or play the float. The Bitcoin network is designed to essentially remove every aspect of there being a middleman in your transaction. So even though I am, as a miner, confirming your transaction and moving it across the network, I'm never holding on to your funds. I never actually get custody. All I'm doing is essentially validating a database. So I never have access to the funds that you're sending to somebody. There's no way for me to get a float. My incentive is to be the best processor of transactions to get the most transactions processed and earn the most fees possible, which happens only if I'm efficient. So there's no incentive to, delay anything or hold on to anything. And I think that's part of what makes it great. Similar to, Visa, most payment processors, flat 3% fee. If you're moving Bitcoin across the network, I mean, unless you're rushing a transaction, it might be 10 basis points. I mean, you're talking about a very negligible fee, and it doesn't matter how much you're moving. I could move $1 billion with 10 cents, or I could move $10 with 10 cents. There's no relative increase based on the amount of money that I'm moving. So that's what's kind of wild when you think about all of the infrastructure that goes into processing very large settlement transactions is that people all the time move billions of dollars equivalent on the Bitcoin network for pennies, essentially.
Well, I like the notion that there's just a flat, and I say a flat rate, but there's there's just a fee regardless of the dollar volume or the size of the transaction, versus like with the Visa network, I think is built on, I think it's like a 3%, 2.5%,
Mhm.
3% fee. And the larger the transaction, that can be a sizable fee. And I know it's becoming more and more common, especially for industries that hadn't historically accepted credit cards as a payment vehicle to pass that fee on to the buyer of the service.
Yeah, what's cool is you mentioned earlier, like how do I even use this to pay for things? And very recently, I mean, within the last few months, Square actually rolled it out to all their terminals where any merchant can accept Bitcoin, and they don't even necessarily have to hold Bitcoin for them to accept it. Like they can do an auto transfer if you're not a, diehard Bitcoiner, you don't want to keep all of your income in Bitcoin. That's just used as the settlement layer rather than, Square making you hold on to the Bitcoin. And what's cool about that is, that 3% fee is across the board. I mean, merchants just accept 3% of all your top line revenue is going to go to the payment processor because that's just the way that it works on the back end. That's the economic model. But when you accept Bitcoin payments, you at least for the first couple of years, it looks like Square is going to have a 0% fee on top of it for accepting Bitcoin. So you're actually saving yourself several percentage points on your top line revenue as a merchant. And you don't, it doesn't feel any different to you. You still, if you want to, are holding dollars. You're only really interacting with dollars. The only difference is instead of that payment going through Visa's network or some other card processor's network, it's being processed over the Bitcoin network. So it saves people on fees.
So so far we've talked, and I feel like I understand that what mining is that completing the transaction for people that are using Bitcoin. Is that, am I clear
Accurate,
on?
accurate summary.
Okay. Um, you the next thought that occurred to me is just, and this may be too big of a topic, but it just, what's crazy to me is we talked a little bit about how um, you've got a fixed ledger with Bitcoin and that there's a limited supply. And my mind is saying, okay, well, assumably, as the value of the Bitcoin increases, what you're able to do is, I mean, any transaction could be a fraction of a particular Bitcoin
Hmm.
based on whatever the market value is at the time of the transaction. So if, like we said earlier, I had 10 Bitcoin and you know, I bought something from you today that was the equivalent of 1 Bitcoin. I've still got 9 Bitcoin, but that wouldn't prevent me from going and buying something else from somebody that perhaps uses Square and was willing to accept Bitcoin as a payment. And so if I buy something else and it's just a, you know, a dinner or whatever like that, it's going to be whatever the market value of that Bitcoin, you know, the fraction of a Bitcoin equal to the dollar amount of the transaction.
Yeah, you're
Um,
exactly right.
and I guess what's on a grander scale is recognizing the fixed amount of Bitcoin versus the U.S. dollar and the ability to inflate or deflate the value of the dollar by inflating the supply. It seems like the the U.S. Treasury would be the last uh, you know, person that wants any kind of digital currency where there's a fixed amount of currency, because it would cripple their ability to um, borrow and pay with less valued uh, you know, currency. And so I guess with that, I'm curious, in just market cap, you said there's 21 million Bitcoin. Is it
Yes.
21 million Bitcoin? What's the market value of the total Bitcoin? I guess 21 million times 70,000. Is that kind of the,
Yeah, we're somewhere between 1.5 and 2 trillion right now.
so is there a sense of how, I mean, I'm sure there's a mathematical number that you can be derived, but I've never even thought about it. What is the total value of the currency in circulation across? Well, let's just take the U.S., the dollar. Do you have any idea?
There's a lot of different ways of measuring it. The easy answer is I believe M2, which is like cash and short-term liquid instruments, is around 9 trillion. Um,
And you're saying that Bitcoin's how many trillion?
1.5 to 2. But
So almost
most people
10%. I mean, it's equivalent to about 10% of the U.S.
about 10% of you know, essentially like cash and cash equivalents. But that's in a sea of, you know, this actually brings up a question of like, what is Bitcoin competing with? Is it competing against just people using like cash dollar bills and what's in their checking account? The whole sea of global assets is about 900 trillion, and 3 to 400 of that is treasuries, like debt instruments. Another 300 is real estate. Equities are about 80, and you know, art 20 to 30, gold about 30 trillion. But the biggest pool of capital that I think Bitcoin is disrupting is debt instruments, credit instruments. And so You could think of it more as a competition for treasuries, which would be sort of like the world's store value asset. That's sort of the bedrock of our financial system is who owes who what. And that vehicle has been primarily U.S. Treasuries and other forms of government debt. And in the recent years, that's become pretty obviously a bad place to park your money because just the inflation rate is outpacing what we get in terms of interest on those bonds. So I would say, yes, Bitcoin is possible to use as daily cash, and that's an interesting use case. But that's the medium of exchange use case. And I would say that the store of value is the most important problem that we're actually solving for, which is how do people reliably store their economic energy over time? And if you're in an environment where bonds are paying less than the inflation rate, equities are at crazy high PE multiples, people just don't even really know what to do. Where is safe? Real estate was my vehicle, is many people's vehicle, and it's probably the best of the lot that we've had available to us. But it's got its own flaws. It has its own way of being captured in a regulatory sense and losing economic energy through degradation. So there's this huge sea of imperfect assets that this new entrant is really just eating up market share very quickly. And we're still very early in that trend, I would say. We're less than 20 or 30 basis points of the whole global financial system. And I wouldn't say it's unreasonable for us to get somewhere in the 10 to 30% range, assuming that the trend continues and all of the technical design characteristics of this asset continue to hold true into the future.
How old is Bitcoin?
It was first released January 3rd of 2009. So we're going on year 17 right now.
And 21 million coins were was originally created.
21 million coins is the total that will ever exist. Of that 21 million, we've already mined 20 million of them.
Okay. I want to ask you quick. You mentioned energy and cost of energy. And so again, my wallet, I've got my, well, now I've only got 9 coins because I bought something from you. Um, is energy more of a function or a concern for miners versus somebody that just has a wallet?
Yes, 100%.
Okay,
Energy, you could go your whole Bitcoin career and never really have much to think about in terms of energy if you're not involved in mining. But if you're involved in mining, energy is your number one thing that you think about before anything else, because that is the input cost to your business.
got it. Got it. It's fascinating. Um, just the whole, I mean, you've totally opened my eyes to just a facet or just a well, just something I wouldn't have considered before. I just, you know, I thought people had their wallets and there was like some sort of a online ledger and, hey, you've got 3, I've got 7, that's 10. What, kind of thing. And we could agree to, kind of like I don't want to say a black market, but just a market that, you know, was kind of, I don't say off the radar because clearly it's on the radar, but it was kind of, it was out there. And I just, the little bit I understood, I shared with you in the very beginning. I did not understand what mining is. And I really appreciate you kind of opening my eyes and kind of breaking it down and making it make sense.
Yeah, of course.
So, hey, Bo, if we could, I'd like to shift gears here for a second. As I mentioned to you before, we started recording by day. I'm an insurance broker. And as such, I work with my clients to assess risk and determine what to do with the risk. And there's 3 strategies we typically consider. We first look to see if there's a way we can avoid the risk. When that's not an option, we look to see if there's a way we can minimize the risk. And if we can't avoid nor minimize, we look to see if we can transfer the risk. And that's what an insurance policy is. It's a risk transfer vehicle. And as such, I like to ask my guests if they can look at their own situation. In your case, could be the cost of power, could be regulation, could be the World Wide Web. I don't, whatever it is you identify and consider to be the biggest risk. And again, for clarification, while I am an insurance broker, I'm not necessarily looking for an insurance related answer. And so, if you're willing, I'd like to ask you, Beau Turner, what is the biggest risk?
Well, I think the Bitcoin network itself is very challenging to find any sort of risk in. And I think that would be surprising to most people to hear. But part of the reason it is such an incredible innovation is how it is designed to be resilient in almost any case. I mean, like, short of a forever nuclear winter and the internet going down forever everywhere, there's not really a legitimate way to take this network out. So, what I would say the risk is for our business, since we're in the mining space, is that we're actually in the physical world. So, Bitcoin is a unique asset among assets because it is digital. It's theoretically indefinite. It doesn't have a lifespan, it doesn't have a half-life, it can exist forever. When you get into mining, people are usually getting into mining to outperform Bitcoin, to get, the tax advantages of depreciating equipment, to get the income stream. But when you enter into the mining space, the risk that you're taking is that now you're dealing with the physical world, whereas you weren't if you were just doing what you do, which is, hold Bitcoin in cold storage digitally. And so you have to be very careful. And I mentioned, briefly our story of our first experience getting into mining in the physical world. And so the people that you work with, to me, are the most important risk to account for that kind of goes untalked about. Your environment matters a lot. So we were hosting originally in Georgia, which is a very hot, humid climate for you to run computers that are going 24/7. So we've decided to locate in the beautiful state of Oregon, where we've got pretty cool climate year round, lots of renewable power inputs, and very low natural disaster risk. There's a pretty good set of reasons why you see a lot of the largest data centers and hyperscalers in the world choosing to make Oregon and the Pacific Northwest a home. That's part of it. Um, and then we mentioned energy risk as well, which I think that's probably the key economic risk. The other things I talked about were more like, is my asset going to exist? What can critically threaten me actually owning this thing and it being safe? The energy risk is more about the business model insulation. So, energy pricing has gone up for most people across the board, almost everywhere. The way that we guard against that really is just diversification. So we have sites in many different utilities. We have 6 facilities right now and building 2 more. And they all have a totally different energy procurement situation. They're all in different utility jurisdictions. That helps us with, mitigating outages, but it also gives us insulation to the energy markets themselves. So those would be the key risks that I would highlight, and the ways that we uniquely tackle them.
Wow, fascinating. The whole world of Bitcoin and all the behind the curtain kind of view of what how it works, and just again what the risks are. I appreciate you sharing that. Hey, Beau, where can the listeners go if they'd like to learn more or connect with you?
The easiest way, if you want to talk to me or a member of my team, would be to go to our website, abundantminds.com. I've got tons of educational resources there, as well as the opportunity to book a call with a team member if you're curious about Bitcoin mining, think it might be something you'd like to get into. I often encourage people, even if this doesn't seem like it's going to be a huge part of your portfolio, just having it as a learning vehicle is totally worth it. I absolutely fell back in love with engineering through the lens of Bitcoin mining when I really didn't have that much draw to it before. So I love sharing that with people. And then you can also follow us on pretty much every social platform. If you just search at Abundant Minds, YouTube specifically has a lot of long form educational videos, our podcasts, and more education than probably most people have time for. But appreciate you having me on, Darren, and this was a super fun conversation for me.
No, I totally appreciate it. And I was just going to say thanks for taking the time and educating me and our listeners. And I look forward to doing it again soon.
Me too. Appreciate you.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.
You're listening to CREPN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CREPN Radio.